Guys, welcome back to the channel. My name is David. Uh, Welcome back to our series as we continue to build our long-term income-based investing portfolio. So as always, like, share, subscribe, hit that notification bell to help the channel grow. And we're going to keep giving you this info, and hopefully you guys can use it for your benefit, or maybe for someone else's benefit. But yeah, so remember to go check out the previous videos. This is part 4 in our series. As we just giving some tips, and I'm kind of giving you guys a insight of my journey as I build this portfolio. I know some of you guys are building a portfolio as well, so I'm always open for recommendations, comments, feedback. We're in this together. I don't feel like I'm more knowledgeable than the next person. Um, I'm always trying to learn. So I love investing. I love learning about investing, and I'm always in the learning mood. So uh, if you have any ideas, recommendations, definitely share them with me, and and that would be great. It would help me out a lot. So um, before I get started, I want to give a shout out to Urban Trader. Um, you know, this is someone or a program I've came across earlier this year, and he really opened my. This program really opened my um, view on trading before or investing before. I, I've been trading for a while, like I stated before in some previous videos. Um, but I was mostly trading in tech companies, your Amazons, your Google and things like that. Like I said, I've made quite a bit of money investing in those companies. Uh, However, there's good and bad sides of that. The good side is when it's up, and my portfolio skyrocketed. But when it's down, it's almost like a, a punch in the gut. You know what I mean? So you can see, thousands of dollars positive or negative, you know, daily. So it's kind of a tailspin. You just never know um, what that market's going to do and how it's going to affect your portfolio on that day. So, um, like I said, I ran across, the owner of the um, Urban Trader, whose name is RJ, and I did take his course. I bought the course. I'm usually very skeptical about buying online courses, but I did buy his course, and I have to tell you that it was one of the best investments I made in 2020. It really enlightened me on the importance of having a diverse portfolio, the importance of having a dividend income based portfolio, um, investing in strong stocks that's been proven over time. When the market dipped back in March or at the beginning of the pandemic, my portfolio crashed almost. I lost thousands upon thousands of dollars. I don't even want to talk about the number, um, because that's what I was heavily invested in, tech. So tech crashed big time. A lot of other companies did too, but uh, had I been heavily invested in income based portfolio, I would still been getting paid, and I would have been able to pick up more shares um, during that time, which would have been more beneficial to me now, as my portfolio has came back very strong at the end of 2020. So I'm excited to see what 2021 holds. So, but long story short, learning about investing in income based portfolio uh, is going to take me to the next level. And I have the credit Urban Trader for doing that. Also teach me about options as well. But like I said, that's another story. But yeah, Urban Trader, you guys should look him up. I'll leave a link in the description of this video. If you're interested, it's definitely worth um, the investment. So definitely check that out. But let's get right to it. Today, I wanted to talk to you guys. two stocks, actually one stock and one mutual fund. So we're switching up a little bit. I gave you guys some REITs previously. We talked about some stocks the last couple of videos. Today I'm going to talk about a stock and a mutual fund. I do own both of these investments. So yeah, check it out. So the first stock we're going to talk about is Exxon. Exxon symbol is XOM. We know Exxon. It's in the the gas business or sector. Currently trading at $41.22. Has a yield of currently 8.44%. It is a quarterly dividend. It is a aristocrat dividend, which means lets me know right there it is a very strong company, very proven company. Been increasing its dividend every year for the last 25 years. Right up my alley. Remember, we're building an income-based portfolio. That's what you want to see in a company. You want it to be strong. You want it to be proven. You want it to, be able to stand the test of time. Exxon has definitely done that, and I don't see anything changing for the foreseeable future. So I have added Exxon to my portfolio, and I'm excited, to see, to watch it work, get those dividends, reinvest back into it, and watch it grow and increase my income. So remember, we're starting small, we're building up over time. So if you're thinking about Exxon, I definitely would recommend it, and I have recently added it to my portfolio. So that's the first stock we want to talk about. And I mentioned that we're going to talk about a mutual fund. Mutual funds, I think, are very important to have in your portfolio. Two things that turn me on to mutual funds. One is, of course, my 401k is heavily invested in mutual funds from my job. So I had a great year. I think my 401k portfolio was up around 44% this year, even with the pandemic. I was able to, have a very strong year as far as my 401k is concerned. So, and it's invested in mutual funds. So I highly recommend you guys look into some strong growth mutual funds to add to your portfolio. I mentioned before that I trade on the Fidelity platform as far as my long-term investment, and they offer a lot of education regarding many different types of investments. So I was looking on the website for some mutual funds to possibly invest in, and I came across a mutual fund. I've actually had this mutual fund for quite some time. The symbol is, let me see, is FSCSX. Let me pull it up here. I got it right here. Let's see here. Bear with me for 1 second. Just letting it pull up here. Yeah, so it's Fidelity Select Software and IT Services. So it may be just a Fidelity mutual fund that's offered on their platform. Like if you go to TD Ameritrade, they're going to have some mutual funds that may be just offered on their platform, or Charles Schwab or whatever may have some mutual funds that may be just available on their platform. I'm not quite sure, but I know on Fidelity it is offered. So I do have that in my portfolio. The symbol is FSCSX. That's FSCSX. And it is currently trading at $27.12. I am up over the lifetime of this mutual fund 65%. Now, you want to have a mutual fund that's growing over time. And I'm up 65% since I initially invested in this in this mutual fund. Of course, I've been dollar cost averaging. I've been, putting money in here or there whenever I can. With mutual funds, you invest a dollar amount, not necessarily about the shares, about the dollar that you invest. So, if this mutual fund is currently trading at $27, if I only have $5 or $10 to invest, then I'm gonna just throw $5 or $10 at it, and I'm still adding to my position. So, uh, definitely want to have a few growth mutual funds in your portfolio. Just a little bit about this mutual fund here. It pays a semi-annual dividend, so I get a dividend twice a year. Current yield is 0.67. Um, and when I'm looking at it's also a 4-star rating by Morningstar. But when I'm looking at a mutual fund, I want to know the history, right? And when I talk about dividends, I talk about aristocrat dividends. Dividend stock, I talk about aristocrat dividends, letting me know that it's been strong over the last 25 years. So when I look at a mutual fund, I want to see how it's done for the last year, 3 years, 5 years, and sometimes even since the exception when it started. So with this particular mutual fund, for the last year, it's been up 40%. Right, 3 years, 26%, 5 years, 24%. So that's what I want in my portfolio. And I just told you over the life since I've had it, 65%. I've had it for quite some time. Um, and I don't plan on getting rid of it anytime soon. Um, I think I started buying into this mutual fund. It might have been $13, $14. And like I said, it's $27 right now at the time of this video. So find you a good mutual fund to add to your portfolio. There are a lot of good ones out there. Um, when I listen to Dave Ramsey, he definitely opened my eyes, and that's all he invests in mostly. He doesn't like to do regular stocks. He talks about mutual funds. So I'm going to add some more mutual funds in the future. I actually already added a couple. I'll talk about those in a later date. But this is the one that's done the best for me. This Fidelity Select Software and IT Services. So remember to do your own research. Um, Yahoo Finance is the number one, app for me that I use regarding my research. Um, Whatever you guys want to use for your own, that'll be great for me. Yahoo Finance hasn't steered me wrong yet. So, um, like I said, remember to like, share, subscribe, hit the notification bell. Leave some comments, some recommendations. I appreciate all the feedback that you guys receive, and that's all for today's video. I'll see you guys later.